Lakeside shopping centre in Essex, one of the jewels in Intu's crown. But that crown is slipping. Another bid for the group unravelled this morning. Intu says Brexit scared the buyers off, but others aren't so sure.
I think the deal failed because the consortium realised that the price it was paying was too high. And, if you think about the current environment, which is very challenging for retailers, there's a real risk that the rents, which look unsustainable, could fall quite sharply as well.
Shopping is moving online, but Intu says its shopping centres are almost fully let to retailers, although some of those retailers look endangered, and others, like House of Fraser, plan to close after Christmas, complaining Intu's rents are too high. When the proposed offer for Intu of 210 pence a share was withdrawn, the company share price crashed to 114 pence, wiping £1 billion off the value of the group. Intu insists its 17 shopping centres in the UK are worth almost £9 billion on paper, but the stock market thinks otherwise. The number of people visiting high streets has fallen every year for the last 10 years. Even prime locations like London's West End have been affected. But the slump in footfall at Britain's shopping centres has been even greater. We've seen plenty of retailers in distress. Now landlords are starting to feel the pain. The way we shop is changing and it's causing upheaval. This investment manager has been moving clients' money out of retail property for much of the last decade. He sees more trouble ahead.
I'm afraid shopping centres and retail warehouses are a burning platform in a perfect storm. You have pressures from the internet, you have the burden of rates, commercial property rates, which is really crippling. They haven't changed the basis since the Doomsday Book, whereas the online competitors, the Amazons and people, are paying nothing like their fair share.
It's been a difficult year for Intu. The group had hoped to sell some of its shopping centres, but now concedes it can't in the current climate. Instead, it's cut returns to shareholders and plans to spend money on improvements. It needs to keep the punters coming. Joel Hills, ITV News.